Hi everyone, and welcome to another episode of the HeelanHub podcast, the show for small business owners. I'm Dan Heelan. On today's show, it's just me today talking to you about some common, mistakes that we see being made by small business owners, particularly I think in the early stages of business, but this can happen absolutely at all different stages of the business. And I've just put together 5 where I think these are very common ones. Of course, there's loads of them and we could go into real detail, but I just want to give you some ideas. So if you're thinking, I've got some cash, where do I spend it? Because you get bombarded daily, don't you, as a business owner, with all these different people trying to sell you stuff. There's always some new fix or some hotness that's going to transform your business and efficiencies and all the rest of it. And it's really difficult, I think, to know what to do. And I think that's one of the benefits of having maybe mentors or people in your professional network, experienced business owners that you can talk to about their different experiences with these things, because I think often experience is quite a big thing. And we're very lucky in our job as business accountants to be able to just see it in play in so many different businesses. Over the years, you get to see what works through other people's experiences as well as your own. So I want to touch on that, and that's what we're going to talk about in today's episode. So I want to start off really with the first kind of mistake in quotes, being this idea of paying for social media management. Now, you might think, hold on, that's counter to everything I've heard. We've all seen like Gary V, if you follow him, he's like, you'll do 12 videos every 2 minutes of your day across 11 different channels and get it all out and all the rest of it. And absolutely, we've seen some wins from that. And this is odd from somebody that has grown a relative sized business using social media across different channels and producing video and audio and all that kind of stuff. The value of social media in today's world is massive and can change your business overnight. So don't take away from this that you shouldn't do social media. Although that said, I was having some chats with a couple of business owners, clients the other day about this. And depending on what you do, I do think there's diminishing returns to social media in general. So, for example, I was talking to my trainer at the gym about this. All his business comes through referrals. He's in a really good place. He's been going for many years. He's got constant demand. He's fully booked. And he was talking about the use of Instagram and whether it's actually worth it for him, because he puts in all this effort and to what end everybody comes through referral. And he did a day of literally putting a stand up when they had this kind of event at the local gym. And he signed a couple of people straight into the only couple of slots he had. It's very, sometimes you've got to look at it and think, do I need to do it as a business? But anyway, forgetting all of that, for me, for a business that wants to grow and wants to scale, social media is absolutely a key piece of what you're doing. However, and this is where the interesting bit comes, is if you're going to outsource that, what we see in terms of actual mistake is people paying for things that don't do anything. And what I mean by that is, a good example, it's very common to see, say, £500 to £750 a month for social media management. And I'm doing little bunny ears for those of you who aren't watching this on YouTube. And what is that? What is it? And it varies from person to person, because there's a lot of marketing consultants out there. There's everything from one person, people that are actually really efficient and you're paying them, solid money, and they're doing a really good job, to we're going to post stock images out on Instagram. Obviously, you want to get some sort of return for that money. And normally that return is going to be, what is the metric? For me, it would be leads. I want people to talk to me. If I was on Instagram, I would want people in my DMs talking to me, booking in to see me, that kind of stuff. If you're just posting stock images and you're not getting enough views, the amount of people that are actually going to reach out after seeing that is going to be rare. You might get one every now and then, but it's going to be rare. So if you're looking at where to spend money early on in your business and your cash flows tight, £500 to £750 is a lot of money to be taking and sticking there. So I think that idea that just post on social media in the modern days of the algorithms we've got now just doesn't make any sense, really, because the content has to be good enough for people to want to see it, for it then to get pushed to more people, to then have eyeballs on it, to then somebody be able to see it. And actually, on top of that, I was talking to an owner the other day who'd found our business through the various social media, and he was talking about he'd watched 30 odd videos, and before even thinking about reaching out. So if the chance of them seeing your one random post on Instagram of a stock image is going to make him think, oh yeah, this is the business I want to talk to, I think it's unlikely. And when I talk to a lot of business owners that do this, a lot of them will say, oh, we got nothing back from our social media strategy. And when you look at what they're doing, it's outsourcing it. So it feels good because you're paying, you've got content. And I still think there is some value to having regular content, because people will check you out across all places online. There's enough studies showing the amount of different touch points someone needs now to be able to want to do business with you. But when they do that, if you have an active Instagram account, for example, at least they can see that it's actually happening. But it's how much money do you want to spend on it? And depending on the type of business, it might just not be what you want. So taking the PT example, personal trainer example, I'm not sure that for a single PT, paying somebody to do that would be that much of a benefit. Don't get me wrong, if you're there with your shirt off and you've done some great reels and you're pushing reels and really good content out and you're having someone schedule that, I think that's a totally different thing. But what we see where the mistake comes is when it isn't that. It's just stock images, or in a world of AI, it's someone putting AI generated posts on there, and everyone can see through it, of course. So it's just not a strategy that tends to work. Where we do find the success, though, is where an owner has tried to get good at doing it themselves. So as we said, using that example, you've learned how to do content creation, you've posted some bad reels and saw they've not done well. So you've then decided to change up your strategy and do something else. And actually that's worked okay for you. And then you're like, oh, actually, I just haven't got time to edit this, or I haven't got time to post it. And then you're investing in the things that really are actually going to make a difference. And we find that is when owners have tried these things, they understand what goes into it as well. Because I think that the more you understand the basics and the mechanics of how it works, firstly, you're going to appreciate their marketing consultant, because I'm a big fan that marketing is something that you've got to do as a business owner. And it's not always time efficient for you to be doing it, but you understanding what it takes means you kind of value that investment every month. And you also know what is worth it. Because if you've posted your stock images constantly and seen nothing, I think you're in a much better position to be like, yeah, I'm not going to do that, because what's the point, So that works out well. And then that strategic outsource almost of like, I know which bits I want to outsource. Let's go and outsource that. And we do see owners getting good returns on that. So for me, main takeaway on that particular one is, look, social media, of course, can work absolutely brilliantly. But for me, from an investment point of view, particularly early on in the business, you want to be really careful about which bits you outsource and where, really. So the second kind of mistake, I suppose, and this one always gets people shouting at me, although I did put a YouTube video out on our main YouTube channel at Heelan Associates recently talking about this, and nobody did, but maybe it's because I called it out in the video. I often talk about this thing about SEO. So if you haven't heard of this, it's search engine optimization. It's this idea that it's essential for a business. You need to rank on Google. So when someone types, like for us, accountant in the local area, or for us these days, it wouldn't be local, it'd be accountant, best accountant UK or something like that. The idea that you want to appear on top. And of course, currently that's quite strong. The idea, though, that it's this easy, quick thing to do, you just need an expert to come in and change some stuff, is played out time and time again just to be not the truth. And actually what's really cool is we've got a few clients in this space that I get to talk to about this, and they will often say, it is a time and effort thing. It's going to take time to get results. So we see a lot of people dropping like huge sums of money, like a new business owner dropping like 1,500 quid every month on an SEO expert to get them to the top of Google. And actually, the results are slow. They're not guaranteed the success. And that cash flow that you're spending there could be done, could be used for other things. And taking one of my clients' comments, actually, I think in the YouTube video, we posted it from our client Discord, and he said, he'd been in it a long time, and it is exactly that. It just takes time, and you're not always going to get results. And also with the way algorithms and things are moving at the moment, there is this question about in the modern world of AI, is it actually worth doing it? Where does it sit? I think there's this whole new world of how do you rank in an AI tool, so it's a really interesting place. But SEO consistently over the years for me has been one of those things where I've really not seen owners getting the returns they want. Of course, there's success stories. There's some really good ones I have seen. So it's not like it doesn't work and people just scamming you. It absolutely does work. But I find it tends to work for more established businesses that can afford that cash flow to put in the time, the consistency, and more importantly, the patience to actually return that. Because it's also can be a challenging thing to measure the success of. Because again, for me, I would want to be looking at, well, what's the impact on our leads? Are we seeing more leads? And if we're tracking where people are coming from and that acquisition channels, where is it Google that they're coming from? But sometimes and even then it starts to muddy the water, because they're like, well, yeah, I came through Google, but I saw this video, or I saw this post or whatever else, or I saw on LinkedIn that you were talking about X or Y. So really, really interesting. So I think that you've just got to think about that and not get too excited on it. And some of these are, when we talk about these 5 mistakes, you're going to see some of them are very marketing based. In fact, the majority of this list is marketing based, because it's where of course you're coming into business or you're in business, and both ways you normally want to work with more people. You want to sell to more customers. So marketing spend is always going to be there, and you're bombarded, of course, by marketers marketing their services. SEO tends to be a massive, sometimes that would make number 1 of my absolute top list, but I think these aren't in any particular order in this case. But in years gone by, that was a real problem and a real common one. You see it less these days. But so if it is you and you're thinking about SEO, just think, look, it could work for me, but actually maybe, depends on the level of spend, it's not right now. And I would put in with this, because it's got the same sort of feeling, this sort of the third mistake as such, And again, none of these are critical often, but I'm going to give you an example here where this was critical and it did actually cause a massive problem. The business, ultimately, this particular client went out of business doing this, and that's sponsorships. So sponsorships are an interesting one. We as a business, we sponsor a roundabout, which is a funny one, racing team, football team, fairs. We do loads of stuff, right? But we're a relatively established business that has a budget that can do that. We can afford to wait for the time, and the brand awareness, in inverted commas, is an interesting one because it does get people to know about you maybe, and you're visible, there's certain credibility to it. So there's all these good things. But for me, often they don't return leads quickly. So if I go back to the old days when it was just like a 2-person business for myself, I would have wanted leads because I can't grow the business. I can't pay my mortgage on brand awareness, albeit brand awareness is obviously a solid thing to have. Again, we're talking about, yes, it's great to have. No one's arguing it's not good to have, but is it what you need right now? And when you're thinking in the small business world of where you invest those critical few pounds, sponsorships is a dangerous one, I think. So I'm going to give you the worst example I ever had. I said there's a client who went out of business doing this. Came in day one, he'd already set his business up, came in to work with us and said, look, I need an accountant. Let's talk about it. We signed up with us and then we were talking about his plans. And he said, right, what I've done is I've taken 25 grand personal loans. I've signed a personal guarantee for this money because new businesses, you just won't generally get lent money unless you're going to sign your life away. I want to say, it just means if the limited company in this example fails, they would go through the limited company and pursue the money from you. So he says, I've borrowed 25 grand. I'm putting it all down on the largest trade show for this particular industry to sponsor it. And we talked about that. And we talked about it, and he said, no, it's absolutely going to be the best thing. He got zero leads from that. So 25 in, his name was in lights. It was everywhere to see, looked great on socials, but no one did anything. He didn't capitalize on it. Now, there are those people out there probably who have had success doing this that are thinking, yeah, but he should have had people in and around the stands. There should have been follow-up. There should have been, and of course, these are all things that experienced people do, but this was a new business owner, didn't know, and he's only one person. So there's only so much time in a day he's got. And actually, I think one of the biggest challenges he had was that he wasn't active enough in the sales arena. He wasn't actively trying to reach out. I think there was this feeling, particularly, I think, in the modern era, that you can just go online and have a great website and have brand awareness and post on your Instagrams, and suddenly these leads just fall in your inbox. It's not true. When you get it right, it is true, but but it takes a lot more effort, I think, than most people realize to do that, and a lot more time and compounding kind of effort to do it. So this 25 grand he bunged on this sponsorship didn't work. And in the end, he then had to borrow another load of money. So this is in the days where the banks didn't care as much. He would then, although it's not that, we're talking probably 2019, 2020. So it's a few years ago, but the banks were a little bit easier on, we'd just let you sign a personal guarantee and you have some more money. Gave him another 25 grand, which he then went out and he was thinking about structuring the business for tax and holding companies. And I remember having a discussion with the gent and saying, look, this is great, but I'm not sure you need to do it. We need to get some sales in. Is there a better place to be spending the money? But again, in his head, it was all going to work. Of course it was going to work. I love the belief. I absolutely love the belief. It's just, unfortunately, in our job, sometimes we see the realism of this. You probably see the stats. Only about half of small businesses ever make it to the 5-year point. He was unfortunately in the other half. So he took out a 25 grand loan to do all this kind of stuff and, invest in all sorts of odd things, and also help pay him down the previous loan. That didn't work. He then hired a load of people, borrowed another 25 grand. And you can see where this story ended. The cash runs out. It just never generated anything. And unfortunately folded, and he was left with 75 grand of personal debt to sort out. So this is a really bad extreme example. But sponsorships, you very rarely see in our game experiences where clients have got massive, obvious returns on it. Sometimes you do. So I joked about the roundabout. Weirdly, out of all the things we sponsor, the roundabout is the one that brings leads. People are like, I saw you sign on a roundabout, actually. I'm like, oh, good. Sign must work. They do work. And yeah, but you're only going to know by measuring the lead numbers, I think. Obviously, there's other metrics you could think about, but sometimes you're just never going to know. So go back to it. And I think not knowing and hoping is okay if you can afford that hope, basically. And I think for a lot of small business owners, you can't afford that hope. You want the leads. So for me, I don't want to discourage you from doing it, because I also think there's altruistic kind of charitable intentions, which are great. We do a kids football team. I don't do it for visibility. I do it because I'm a football fan and I play football at teenage level and below. And I think it's good to support that. So sometimes it is just a case of you want to do something cool, and there's nothing wrong with that at all. But again, when we're talking about survival in either tough spots or early spots, I just want to kind of put this in your mind that this is probably not the best use of your funds based on our experiences that we see. So the sort of fourth mistake, I would say, and again, using the term mistake lightly, is company cars. So this one's more limited company based, but with our clients, this doesn't tend to happen unless they've come to us, because they normally would ask us first. But this is actually quite common where we have a client come to us and they've done this thing and we're like, we have to be the bearers of bad news for you. Unfortunately, this is going to cost you tax. So how this might look is if you've got like an old school accountancy arrangement. So say you're on one of these cheap online accountants that they offshore it and they just put your numbers in your boxes and file it, right? There's some value to that service because it's technically quite difficult and, you're not having to do it and you don't have to pay for software. So like there is a benefit to that. But what will happen is you trade all year. You decide, oh yeah, I've read online, seen some dude on the internet and a company car sounds like a good idea. So you've gone and got yourself a nice petrol Audi, say, and thinking that's great. I can fuel it, car can pay for it. Makes much more sense to have the company pay for it. The company is going to get a tax deduction. And that's absolutely true. The company, in the vast, vast majority of the cases, nearly all the cases, is going to be getting a tax deduction on it and reducing its tax bill. But there's a massive impact on you personally for that car being available to you. And we're talking about owner managed and owned. So, like, let's just say you're a marketing consultant, talking to marketing, you're a marketing consultant, you bought this Audi, it sits on your drive. Of course, you drive it around for business, but it is available to use privately. I don't want to go too deep into the ins and outs of that because I've done plenty of content on the podcast talking about that. The minute it's available for private use, there is this massive benefit in kind charge. Now, that extra tax cost personally and with the company can end up being sort of 6 to 10 grand a year to have this car. And the problem is if you've done it, you can't unwrite history. So if the company's bought it, it owns it, the V5's in its name, you've insured it, you've paid everything out of the bank account and it's paid for it, there's very little you can do about it. You're going to end up in that tax bill. And then you're going to need some help to kind of unwind the position if you work out that it's actually not ideal for you. And I think that's the biggest problem with this one is that you just don't know about it until it's later. So 2 things here for me. If you haven't got an accountant, then do your research and really understand the benefit in kind position. Because there are some benefit in kind cars that are good. So like fully electric's still really quite good at the moment. And a van, and I've done a recent podcast on vans. So if it qualifies as an actual van, those 2 things are still relatively good, but there is still a lot of paperwork to do. You've still got to do a taxable benefit in kind report. They call it a P11D, and you've got a P11DB if we're being completely correct. There's a couple of returns that you've got to do every year. So actually a lot of hassle, and it's about to change so that you have to payroll these things in the payroll. It's just admin horror, really. I think when we explain to clients what needs doing, and that obviously if we're doing it, there's a fee for that, and they're a bit like, well, I don't understand. Well, it can't be that difficult. Honestly, you do it. It's a right pain. So you've got to weigh that up. But there are many, many occasions where something like a fully electric, new and unused car right now is going to work out really well for you. But that's not the mistake we see. We normally see, and because you would normally think, okay, well, I'm saving so much money doing that the extra cost of having somebody do the paperwork for the taxable benefit is not going to be a problem. The small tax bill I'm going to get personally on that electric car is not going to be a problem. But when we're talking about something like a diesel SUV Audi or something like that, it could be incredibly large and you don't find out till it's too late. Because, give you an example, in the accounting world, a lot with small businesses, this happens all the time. We see it when a client comes to us. They've started a business, they've not thought about an accountant for the first 6 months. They've then learned what they learned off ChatGPT or the internet, bought the car, running the car for 6 months. Then it's their year end, then they think, I need to find an accountant, sign up to one of these online jobbies. And then actually they've got 9 months to file the accounts. So they get the accounts 2 days before the deadline's due. By the time they've been onboarded, given all their stuff, answered all the questions. And at that point, someone says to them, oh yeah, by the way, your taxable benefit on this car needs sorting out and the tax year's gone and you can just get such a mess. Takeaway, just make sure that you're getting help if you can. And this isn't a sales pitch, but I do think this one needs some professional help if you're thinking of doing it, or at least a lot of research from you just to make sure that you're cool with what you've got to do from a benefit in kind. And I would urge you in the strongest possible terms to really consider not having that limited company own the car if it's something like a petrol or a diesel, not a van. But in some instances, it can still be the right thing. But so if you're really unsure, do get some help. But it absolutely will get your tax deduction in the company. It's just if you factor into account the personal tax costs, that's normally where it actually falls down as a scenario. So there's that one to think about. Then mistake number 5, and I've actually got a bit of a bonus mistake in this. So it's more like going to end up like 6. But the mistake number 5 is deciding that you're going to jump into an office space or rent a unit early. So I think this can often feel like a success milestone. You've been trading for a while. You think, yeah, do you know what? Actually, I should have an office. I definitely should have it. It makes me look successful. Or I've definitely got to get that prime real estate on the shop front because it would be amazing. It would give me all the space I need. And like, there's genuine reasons why that might be the case. It's not always the feeling of this, like the success and the success milestones type feeling, but that's often part of it. Emotions plays heavily into this decision, I often find. Sometimes you see people where they're like early doors and don't really need it, but they're going to do it and they take a big long lease on, and then they just underestimate the true costs of it. So obviously you've got the rent, that one's easy. Everyone's like, well, how much is it going to cost me? But then they don't factor in that they've got business rates, which is just another tax on its own for majority of people. There are some reliefs for really smaller units. You're going to have service charges. So that's where like your bins are empty. So as I'm recording this podcast, there's a big lorry banging in the background, which is emptying bins here on the park. And what will happen is that, we pay a percentage of that budget. And we are, and the size of unit we've got, that's fairly hefty because it's normally done on, they split it between all the different tenants depending on the size of the unit you've got. You'll have insurances, utilities, they're obvious ones, but then you'll have things like TV licenses because you want to put your TV in reception, or you want to play music in the internal offices, you need a PRS license. There's all these extra costs that come up. And then for me, though, the biggest danger is the inflexibility of these. So if you sign a commercial lease normally, you end up having to personally guarantee it if you're a new business. It's actually, a lot of people will want that again, so that if anything goes wrong, they can come to you as the owner for the lease. And that means that then you're personally liable if the business just can't afford it, or you just decide to pivot the business and don't need the space. And often with commercial leases, without going too deep into this, there's something called dilapidations. And what that means is that if you leave the building, the landlord says, cool, we want it back in mint condition. No wear and tear, we don't care, it's mint condition, and you have to pay for that privilege. So the way the process normally works is they send in a surveyor and they look every scuff and mark, and they put a cost against it. And then they say, you can either fix this or you can pay us, and that's the bill. And it's a massive money grab most of the time. But to give you an idea, the people in our office here, they had to pay, I think, 125 grand or fix it before they moved. We moved across the road from one unit to the other. It was going to cost us 50 grand just to move from an office that we'd only been in a few years. So we actually project managed that and brought that down. I think it cost about 1,200 quid in the end. So it is possible, but you've got to understand these dilapidation things. It's not always the case, but for a lot of them it will be. So, and that could be absolutely brutal. And again, if you've got the personal guarantee issue, so you're trying to break the lease, come out of it because you just can't afford it, business is failing, and you've got delapse, it can really, really cause you a personal problem. So just be careful. I think the takeaway for this is really be careful what you sign in. I know it's annoying to get professional help, but I would normally talk to a lawyer about this, a commercial lawyer, to just check you're happy with your responsibilities under that lease. I know it's going to cost you another 1,500, 2 grand, whatever, to have them look at it. But when you're signing for a long-term lease, this is definitely important. The other option, though, I think, and I love the fact that these things exist, is because they look more expensive, but you can have flexible managed office spaces in like some of these sort of big buildings. And I actually think they're really cool because often you've got no delapse, you've got none of these extra costs. It's kind of a bit more of this is the minimum amount of cost you need to pay. And you look at that and you compare it to, say, like a rental agreement, and you'll think, well, that's really expensive. And they do look quite expensive, but they're so flexible that in the early stages of your growth, you don't know. I mean, to give you an example for our own business, we moved 3 times in 5 years, I think. And each time we were signing big leases thinking we're not going to grow this quick. We just exploded consistently. And actually, there's a cost every time you move to doing that, even if it's all amicable and they'll give up a lease because you're taking another one with them or anything else like that. Well, for us, we were moving around sort of almost connected different places. But if we were in a managed office, we could have given our notice and then we would have been out, and then you'd be in the next one, and then you could do that. So I like those ideas, and I think that you shouldn't overlook the fact there's other businesses in those places as well. So there's networking opportunities and support networks, all these really cool things. And I think I've talked about this on the podcast a few times, is that I started working from a conservatory with my mum. I think it would have been really cool. They didn't really exist co-working spaces 20 years ago, but they would have been cool to not, we're not in London. No, maybe they did in London, but they didn't. Certainly where we are in the South Coast. I think they're really cool things to be able to do because it would have been kind of motivational to be around other people doing the similar things. So yeah, a main takeaway for me on this is just really consider whether you need that premises early. Of course, as you grow, you're going to need it. It's going to be one of those things that's going to happen. Of course, as you grow, it's going to be one of those things that's going to happen and you're going to need it. But they're an expensive long-term commitment. And if you do have to sign your life away on it, you want to know that it's right for you, and that particular premises is going to support your growth. I think you've got to look slightly big. So is that balance of, you don't want to be spending money on space that you don't need, but at the same point, if you're on a growth trajectory and you can see it and you can feel it and the numbers stack up, you've got to also be aware of what happens in 3 years' time, because often these leases come with a time period, 2, 3, 4, 5+ years, and thinking about what that might need to look like is going to be important. Now, I did say to you I had a bonus one, so I just want to talk about hiring too early. And the problem is that, this one's probably quite obvious. You hiring before the business can truly support the wages. So what commonly happens is someone will say, look, I just can't do this anymore, I need some support. They don't necessarily work out the right thing to hire. So I'm always big on do a task list and see what the tasks are. That if somebody was here tomorrow, what would they actually do? Because I think there's this idea that you just bung a body in there and that's going to fix it, but it very often doesn't. And you might think it's a full-timer, maybe it's a part-timer. But what tends to happen is you put this extra member of your team in and your cash flow tightens, because small business is never like this beautiful, well, there are occasions, but not normally, this beautiful kind of curve where it just continually grows. It's often a step. So you suddenly add in like someone's wages at 28, 30 grand on top, suddenly just got to come straight out of your profits. And what we tend to see happens is that the owner carries on taking the same amount of money. Maybe they take a step back because they're like, look, I've worked hard, I've earned it. That old classic, I've earned it. I'm going to go on holiday, or I'm not going to work weekends anymore, and we're going to do this. And that's like, I get it. Like, of course, everyone wants to be able to do that. But the reality of small businesses, that's often not possible. And what happens is you've now got to fund that person's wages and you're still funding yours. And then cash flow tightens. You start realizing that you haven't got the money to pay the tax, all that kind of stuff. And they just took that step back, and then sometimes it's very difficult to recover. So for me, I think it's just a small one to say, look, yeah, absolutely, if you're going to grow, you want to hire. As somebody that has a reasonable sized team, do something meaningful and grow a business, you're going to need people. But when it comes to those early employees, I think you just got to think about making sure that accountant, I know, but you've got to do some numbers to see, like, what's my minimum that I need to take to make this work? What's my assumptions on growth that's going to mean that this is actually a good idea? And from an HR level, human resources level, it's almost like, what is their job description? What are they actually doing on a daily basis? What problems is this solving? Because you see sometimes we'll have like a retail shop and there just be bodies everywhere and they're not making any money. And it's like, what the body is kind of doing. I don't mean body's derogatory. It's just what it, from a pure pound figure, you look at it and you think, well, you've got this person standing there. What are they actually bringing to the business? What are we doing? And sometimes there isn't a right answer. It's just this feeling that we needed somebody, or we wanted to have them so we could have days off. And of course, those things are great, but sometimes the numbers don't support it. Without going off too much, it reminds me of when I see some things when we post on TikTok about TikTok's a prime example, because at the time it was getting a lot of people commenting about this, but I would talk about the government's cost of forcing all the minimum wages up and the employers' costs of now what it costs to hire a young person, and how that's gone up 40% in over a few years, and the impact and damage that has. And people will often come in and say, well, you shouldn't be in business if you can't afford to pay people a real wage. Mechanically, that doesn't work. There's only so many cups of coffee you can charge at a certain price to cover and make enough profit to pay all the rent and all the people and all the rest of it to happen. And this is often the case here, is you can have all of the right thought processes in terms of course you should be able to have a day off. Of course you should be able to do this, right? But that's not how small business and entrepreneurship works quite often. So just think about it and just be careful of that one, because unfortunately that one is often a very slow killer of small business. Sometimes not a slow killer, but a lot of the time it happens over time. You see over 6 months, over the year, it starts, the profits shrink, and then it's just bills start stacking up. So that's it. So final advice here for me on this one, because we're going a bit long. Run the numbers first. It's going to be obvious, isn't it? 2 things for me. Can you afford it on paper? So work out, in an ideal world, does this work as a model? If this person existed and I'm taking this money, does it work? But that is slightly different from, can I afford it right now? And will I actually have the cash available to do it? Because sometimes that model works fine, but you haven't done the extra sales yet, or maybe you haven't got a lot of cash, or maybe you do the model and you work out it's actually going to take 6 months to break back even on the person's wages, but you've got a lot of cash that you've retained from your other profits, and actually you can afford to kind of just eat into that cash, and that's a trade-off you're willing to make. So the 2 things need looking at. Now, if you want some help with this, if you go to heelanassociates.co.uk/cashflow, there's a free template that is embarrassingly simple spreadsheet. It just helps you plan your cash flow. There's no details. You don't need to stick any details in or anything. You literally just click on it. It gives you an Excel file that we've used many times, and they just plan it out, see what happens, and you get some idea. There's a tab for working out the budget, which is more like the can I afford it on paper, and there's a cash flow where you can put your opening bank balance in and just put your ins and outs, and you can see what the results are. So do that. That will definitely help you do it. So they're kind of the most common reoccurring problems that we see small business owners having that causes them to end up either being out of business or really, really struggling. But the positive here for me is that if you are thinking, and I've got nothing to sell you here on this, I think it's just experience of seeing the impact of it personally and also with clients, is one thing that never really doesn't pay for itself is investing in things like coaching, training, mentorship, online courses, that kind of stuff. Because even if they're rubbish, you normally take that one thing away for it, or even if it's just inspiration. And also maybe it's just being in the room with other business owners, like I was talking about. There's a network of people there to have. Maybe it's the accountability that helps you. So I think that the return on investment for that kind of stuff is actually always positive. I've not seen, even if I think about the worst course I've ever done, there was still something I took from that. And I was like, it's okay. And when I talk to other owners, it's generally the reception as well, is nobody ever really regrets paying on their own training. I remember one particular thing, I remember paying quite a large fee for some bespoke training. And I still think that I overpaid for it. But when I saw the results I got from it, you can never argue that I overpaid for it. It's one of those things, like, I know logically that seemed at the time like a silly thing to do, but the results just have paid down multiple times for it. And I think that sometimes the sort of trade-off that you've got to make is what was the outcome. At the end of the day, no one can take your skills from you. As training, that kind of stuff is often really, really good. There we go. Just some thoughts from me on these. I think it's a good time of year to talk about it because a lot of people are in that place where we're starting to think about making new businesses, or maybe we have done we started it in the new year and actually we're now struggling a little bit or thinking about the next stage of growth. So hopefully there's some thoughts in there. And if you have enjoyed the show, please do subscribe so that you get these sent to your feed. If you want more tax tips and business insight, be sure to connect with me and my great team across all the social media channels, including, of course, things like YouTube, our main channel at Heelan Associates. We throw these shows up on a HeelanHub channel, so you can go in there in the comments, and then most weekends I'll go in and answer if anybody's got any questions there and I can answer them. I'll do that. And of course, we're on Facebook, Twitter, TikTok, all of the different channels if you want to do that. If you've got any specific questions about the podcast, you can email info@heelanassociates.co.uk. And actually, if you want anything particularly, if you've got a question or an answer you're thinking what make for a good topic on the podcast, also send that in. I'm always interested in what people actually want to hear. I've been rambling on this mic for years, so it's good sometimes to get a feel for what you want to do. I just talk about what I want to talk about, what I think might be useful, and that'd be cool. And yeah, please do, if you get this through things like Spotify, Apple, subscribe. I think most of you get it through Spotify by far. And if you can, just drop us a review. Helps with the visibility if you have enjoyed the show. Well, that's it. So have a profitable and tax efficient week, and I'll see you in the next one.